In this video, we are going to be analysing AGFS because it is one of the leading gappers today. We did look at HTCR and user, but both of them didn't really have much volume, so there's no point really even checking these out. But we can see that AGFS was actually moving, and now, yes, it is starting to consolidate, but we can start getting some targets on it. So what we're seeing on AGFS is it is actually very overbought. So you can see our fourth deviation on the 6 month and the fourth deviation on the 1 year chart is at 131 and 135. This does tell us whenever you are above this level, it is a very risky stock to be buying, unless there is some sort of news, which I couldn't see on here, that they are getting a buyout for a certain value. For example, if they were getting bought out for, say, $2.80 a share, then it would make sense. But otherwise, being above this level, it is very risky, and usually if you're holding long up past this level or getting long higher than this level, you have a good chance of losing money. That's why we usually short being above this level, or at least just don't take any trades, especially if we're long biased on it. So really, we expect a pullback to 235 to 230 relatively quickly. And what do we mean by that? Probably today or tomorrow. That's where we expect to see us back below. Now, once we break that, what are going to be other key supports that we're paying attention to? And that's going to be around that 215 mark. That is our third deviation on the 6 month and also the third deviation on the daily. And what you are seeing on AGFS, which is really good if you're looking to trade it, is the levels are very close together. And what this means is the levels are even stronger than normal because you've got two of them right next to each other. So when you break these levels, you expect more of a breakout. But also when you confirm on these levels, like breakthrough and confirm, really it is just a good indication that the move is over. So these ones can be a lot easier to trade, especially when you can see when the momentum is over. So if we did though continue even lower down, we are then paying attention to basically $2. You've got the $2 key psychological level, our second deviation at 197 and the other one at 195. So really just use it as a zone. $2 to 195 is a heavy lane of support. So we come into here, definitely expect a bounce, but in time you may bounce to that 215 for the third deviation and then just continue to fade down. And where will our final targets be? And really that's going to be around this 180 because that is going to be our first deviation on both the 6 month and the 1 year. Now, if you were short and you wanted that absolute final target, then we would be looking for a move to around 160 because that is statistical mean, but also going to be that gap fill location. But really holding down all the way to that gap fill can be quite risky, and usually it will be a bit slower once you go past that 180, and you can usually find better opportunities elsewhere. Anyway, that is the main breakdown on AGFS. If you did enjoy the video, why not drop a like and subscribe and check out one of these two analysis videos.